Hi, this is the second video in the series for example sums on the topic of redemption of debentures in lump sum on maturity. Let's go on to the fourth example sum. Example 4. XT Limited, an unlisted non-NBFC HFC company, has 20,000 9% debentures of rupees 100 each outstanding as on 31st March 2019. These debentures are due for redemption at a premium of 10% on 31st March 2020. The company has a credit balance of rupees 22 lakh in its surplus, that is the balance in the statement of profit and loss. Instead of declaring dividend, it decided to redeem the debentures. We are asked to pass the necessary journal entries in the books of the company for the redemption of the debentures. Now we are dealing with an unlisted company, but it's a non-NBFC HFC company. So we need to create DRR. Let's calculate the amount of the DRR to be created. There is this sentence in the problem which says, instead of declaring dividend, it decided to redeem the debentures, which means the company has decided to redeem the debentures purely out of profits. So we need to create DRR for an amount equal to 100% of the face value of the redeemable debentures. And in this case, it's 100% of the face value is 20,000 multiplied by 100 each, which comes up to rupees 20 lakh. So the amount of DRR to be created is 20 lakh rupees. There is enough balance. There is a balance of 22 lakh rupees in the surplus. So we can transfer rupees 20 lakh from the surplus to the DRR. The date of redemption is 31st March 2020. So we will transfer to DRR on 31st March 2019 and make the investment in DRI on 1st April 2019, and the amount should be 15% of face value, which is 20 lakh rupees, which comes up to rupees 3 lakh is the amount of the investment to be made. We'll go ahead with the solution. In the books of XT Limited, journal, date, particulars, LF, debit rupees and credit rupees. We'll begin with the journal entry for transfer to debenture redemption reserve. 31st March 2019, surplus, that is balance in statement of profit and loss account debit, to debenture redemption reserve account for transfer to debenture redemption reserve. The amount transferred 20 lakh rupees. The next entry, we will make the debenture redemption investment. Date 1st April 2019. Debenture redemption investment account debit. to bank account for the investment made. Amount of the investment rupees 3 lakh. We'll move on to the date of the redemption, which is 31st March 2020. We'll begin by realizing the debenture redemption investment. Bank account debit to debenture redemption investment account for DRI realized. Amount realized is the amount of the investment, which is 3 lakh rupees. Next journal entry, on the same date, we will make the amount due to the debenture holders. Please remember, it is redeemable at a premium of 10%. So it is 9% debentures account debit. The face value 20 lakh rupees. Premium on redemption of debentures account debit. %, comes up to 2 lakh rupees to debenture holders. Account. Amount payable 22 lakh rupees for amount due to the debenture holders. Same date, payment made to debenture holders. Debenture holders account debit to bank account. The amount paid 22 lakh rupees. For debenture holders paid off. And the final entry is for transfer of the DRR amount to general reserve. DRR account debit to general reserve account for the transfer of DRR to general reserve account. The amount transferred is the amount of the DRR which is created, amount equal to 20 lakh rupees. So we are done with the entries. I will remove the split. We can view the answer. Let's say example sum 4 at the top, followed by the working notes to calculate the amount of the DRR as well as the DRI. And these are the journal entries. The first screen and this is the second screen. Example 5. CSI Limited, an unlisted company, has outstanding 21,007% debentures of rupees 100 each on 1st January 2015, redeemable at a premium of 8% on 30th June 2020. The company decided to transfer the required amount to DRR in 3 equal annual installments starting from 31st March 2018. The company invested the funds required by the law in fixed deposit in a bank on 1st April 2020, earning interest at 10% per annum. Tax was deducted at 10% by the bank on the interest earned. We are asked to pass the necessary journal entries for transfer to DRR, investment in DRI, and the redemption of debentures, ignoring the interest on debentures. It's given it's an unlisted company. It does not say whether that it's a non-NBFC or non-HFC company. But since the company has decided to transfer the required amount to DRR and also make the investment as required by the law, we will assume that it's a non-NBFC or non-HFC company. Let's calculate the amount of the DRR which is required. Amount of DRR is equal to 10% of the face value, and that is 10% of rupees 21 lakh, which comes up to rupees 2 lakh 10,000. Now this is going to be made in 3 installments. So each installment is equal to rupees 2 lakh 10,000 divided by 3 comes up to rupees 70,000. It says the company decided to transfer the required amount to DRR in 3 equal installments starting from 31st March 2018. So the first installment will be 31st March 2018. The second installment will be 31st March 2019. And the third installment will be 31st March 2020. We'll go ahead with calculating the amount of the DRI. So DRI amount is equal to 15% of rupees 21 lakh. This is equal to rupees 3 lakh 15,000. And the date of the DRI the redemption is on 30th June 2020. So we can make the DRI on 1st April 2020. We'll go ahead with the solution. In the books of CSI Limited journal, we have date, particulars, LF, debit rupees and credit rupees. We'll begin with the transfer to DRR, the first installment due on 31/3/2018. Surplus, that is balance in statement of profit and loss, account debit to DRR account, transfer to DRR the first installment 70,000 rupees, transfer to DRR. The second installment transferred on 31st March 2019, surplus, that is balance in statement of profit and loss, to DRR account. Second installment 70,000 rupees transferred. Transfer to DRR. The last installment, 31st March 2020, surplus, that is balance in statement of profit and loss, to debenture redemption reserve account. The third installment transferred 70,000 rupees for transfer to debenture redemption reserve. The next entry, we will make the investment 1st April 2020, debenture redemption investment account debit, to bank account. As per the calculation, investment to be made 3,15,000 rupees. For debenture redemption investment made. We'll move on to the date of the redemption. It is 30th June 2020. First, we will sell the DRI. Bank account debit to debenture redemption investment account. The investment sold 3,15,000 rupees. For debenture redemption investment realized. Now, as per the question, the fixed deposit that we've made in DRI earns interest at 10% per annum, and there's a TDS which is deducted by the bank at 10%. So the amount of interest earned is equal to the principal amount, which is 3,15,000 rupees, multiplied by 10%, payable for 3 months from 1st April 2020 to 30th June 2020. So it's 3 divided by 12, or in other words 1 by 4. So it's 31,500 divided by 4, which is equal to comes up to 7,875 rupees is the total interest earned, and the TDS on this is 10%. So that comes up to rupees 787.5, which is 788 rupees. So the amount received in cash is equal to 7,875 minus 788, which is equal to 7,087 rupees. So let's pass the journal entry for receipt of interest earned. The date is the same, 30th June 2020. Bank account debit. The amount received after deduction of TDS, 7,087 rupees. TDS receivable account, it's an asset, 788 88 rupees to interest earned account. Total interest earned 7,875 rupees. For interest earned, the next entry we will make the amount due to the debenture holders. %7 debentures account debit, ₹21 lakh. It's redeemable at a premium of 8%, so we'll debit premium on redemption of debentures account. Which is 8% of 21 lakh, comes up to 1,68,000 rupees to debenture holders account. Total amount payable 22,68,000 rupees, being amount due to debenture holders. On the same date, we will pay the debenture holders what is due to them. Debenture holders account debit to bank account for the amount due to debenture holders paid off. The amount due paid off is 22,68,000 rupees. The next entry on the same date, 30/6/2020, we will transfer the DRR amount to the general reserve. For transfer of debenture redemption reserve to general reserve account, ₹2,10,000. Now we've created an account called interest earned, which has to be transferred to statement of P&L other income at the end of the accounting period. So that's on 31/3/2021. Interest earned account debit to statement of profit and loss other income for transfer of interest earned to statement of profit and loss at the end of the accounting period. The total interest earned 7,875 rupees. We are done with the entries. I will remove the split. We can view the answer. So those are the workings at the top, followed by working notes to calculate the amount of DRR, the debenture redemption investment, as well as the amount of the interest earned. And these are the journal entries. The first screen the second screen. And the final screen.